afternoon and welcome to the latest edition of the PrimeCap Daily. Now, it's a very quick one today. Normally I might run into the 4 or 5 minute diatribe about the markets, but I'm prompted to do today's PrimeCap Daily simply on the basis that over the past 2 to 3 weeks, I have been struck by the number of prospective clients, private clients, who are unaware of the very strong correlation and link between what's going on globally in terms of market movements, sentiment around the world, things like Brexit, data coming out from various economies, whether it's the EU or the US. They're unaware of the link between that and a rate of exchange. And even more so, people are unaware of the speed with which a rate of exchange can change based on the prevailing sentiment. Case in point, a bit of an example of what I mean. At any given moment, a rate of exchange, so let's say this pound to the US dollar, is oscillating. It is moving up and down by fractions, thousandths of a percent. At times of distinct sort of volatility or uncertainty, if there is a vote, for instance, happening in the House of Commons and people are unsure as to what the outcome is going to be, those banks and those institutions are nervous and they may command or they may ask for a little bit more of a dollar when they sell a pound. Those institutions holding US dollars may say, well, actually, I need to protect myself, so I will ask for a slightly higher price for the pound that I'm looking to purchase. So markets move based on the various trends and appetites that animate those who hold currencies, which are invariably governments, institutions, banks. Now, I'm going to put up a graph. Here it comes. This shows the oscillation, whilst I'm talking, of a rate of exchange. You can see that the sterling to dollar rate is changing ever so slightly. Equate this now to a company that buys in Flock wallpaper or reproduction French furniture. For every pound that is paid, the rate of exchange oscillating means that the foreign currency cost goes up and down with the market. So for those who are paying invoices, businesses that are paying invoices, movements in the rates of exchange have a material impact on what they are paying. On the flip side, let's say we have a lawyer, American lawyer, seconded to the United Kingdom, to the city offices of his law firm. He is sent over to the UK for up to 2 years with his family, and his law firm pay his rent, or whatever it might be. They pay him a sum itemised or qualified in US dollar. The number of pounds sterling he, his wife, his family may have to spend depends entirely on the rate of exchange. And in a very real sense, every fractional movement in that rate of exchange will affect how many pounds the US dollars he's paid equate to. The reason I tell you all of this is because a large number of our private clients are unaware that there is such a strong link, such a sort of sense of a correlation between the two. They're even less likely to be aware of what we, PrimeCap, as a business can do to minimise their or your exposure to rate movements. So if you are a lawyer being paid in US dollar and you have expenses in sterling, there are various simple, economical ways of ensuring that you and your family and your spending is unaffected by rates of exchange and their movements. Gosh, done. Hopefully not overrun, but I just wanted to qualify, we are always happy to have a conversation about what individuals can do to, in a way, protect themselves from exchange rate volatility, particularly now, and it's going to continue. Please do feel free to check us out. We have recently joined Instagram, of all things, because we thought, hey, charts are more a visual medium than yammering on about them verbally, but also because we love screaming and shouting about our clients and some of the partners that we work with. We are at PrimeCap Brokers on Twitter and on Instagram, and if you have any questions, please post them below. Thank you.